community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to deal with qualified retirement plan assets, and can they be transferred to these irrevocable Medicaid trusts?
So this is a tough asset in general. When you're dealing with retirement plan assets, it's difficult from an estate planning standpoint or a Medicaid planning standpoint to deal with them. Why? Because they have both an income tax component and an estate tax component, right? They're taxable when you take them out, and when you die, they're subject to your estate tax. So the general way to do this would be, one, you can name the spouse as the beneficiary of the IRA, or you can name the kids the beneficiary of the IRA, or sometimes you can name the trust the beneficiary or the estate the beneficiary. But it all depends on the size of your estate, the size of the IRA. But the one thing you really can't do is you can't take the asset and transfer it to the irrevocable trust or revocable trust while you're living. Otherwise, it will create a income taxable event. So tough to plan for those in advance unless you name the estate the beneficiary.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary right now by calling 866-848-5699. That's 848-5699, or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston, proudly presented by Veterans Development Corporation. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you, and we've got markets continuing to be a little bit dodgy as we head through the first week of October trading here. Obviously, a few different situations that are out there that markets are paying attention to. You've got a port strike that's happening in the United States. You've got the situation that is escalating between Israel and Iran now. And so markets trying to sort out, hey, what does this all mean for the economy and for, the companies that are represented in the various different indices. And yesterday the message was pretty clear. If you are anything other than energy, you're getting hit pretty hard. That was kind of what we saw with markets yesterday. You had a few exceptions here and there, but by and large, that was the story. Today, pretty similar in terms of what we're seeing, with energy largely carrying some gains through early trading. You've got some other areas that have a little bit of green showing up, but otherwise, it's fairly negative out there as markets are trying to, again, sort through what the overall outcome of this looks like. And so you're continuing to see a developing situation in the Middle East, coupled with this port shutdown in the east coast of the U.S., and overall it's made for a pretty ugly start to October, though, Paul, did you see how September finished?
Up 2% on the month?
Yeah, that's right. It was not the bad September that I was told it was going to be on September 9th by the Wall Street Journal.
Very true. Same could apply for October.
Here's the thing. You never know. Like, seasonality, it's something where it's an average of, 70, 80 years in markets, but again, it doesn't tell you what's going to actually happen. October historically has been a really good month in markets, largely because, hey, you have one bad month. It's rare that you string a couple back-to-back like that. And so you've typically seen a number of big bounce backs happen in October. I'm not saying that the situation is going to be reversed here, but hey, we have to be aware of the fact that markets are reacting to what's going on now, not what happened 80 years ago in markets. That's just not relevant to what's actually going on today. So you've got these concerns that are out there. On top of that, we continue to get more economic data that is messy, not really indicating much of anything in either direction. There are still plenty of concerns to grab onto if you're bearish. There are still plenty of things that look like green shoots if you are bullish. So it's kind of this mess of data that we're seeing right now that's going to have to resolve itself over the next few months. But we could get some chop heading into the end of the year just because every week we wake up and it's like, hey, this looks completely different from last week.
Yeah, I used the word yesterday, Chuck, with Mike, murky, because some data points, like you mentioned, I could point to and make a compelling case that GDP, I believe, is running close to 3% in terms of economic growth, depending on what quarter you're looking at. I think the final estimates for 2 came in at 3% for quarter 2. And then you can also look at the labor market, where we've seen some weakening. I'd be interested your thoughts. We weren't on the air yesterday talking about the JOLTS report, where we saw an uptick in the amount of jobs out there over that 8 million threshold, but certainly the hirings rate had pared down a little bit. So that could be sort of the more pessimistic side of things. The labor market is not as strong as it once was over the course of the last year or so. On the economic front, GDP and consumer spending are areas I could point to that would dispute that, saying that, hey, there is still relative strength from the U.S. economy. But trying to figure out what direction it's trending into, that's what we'll focus on the next couple months. If it's truly the labor market that is an area of concern that causes a slowdown, or is there going to be some resiliency over the next couple months here?
So when we talk about what is going on in energy markets, the impetus for what we're seeing is very clear. Yesterday, you had Iran launch a missile attack on a number of areas in Israel, predominantly targeting Israeli military bases, though there were some, scattered missiles that didn't, hit those exact targets. Ultimately, Israel said, hey, look, no one was hurt by any of these. Even the ones that did, make impact did not cause any casualties. There was, I believe, there were a couple of injuries caused by falling debris from missiles, but again, nothing major there. But the question is, hey, what is the Israeli response going to be, given that they've indicated a willingness to retaliate with strikes on Iran, potentially targeting Iran's oil and or nuclear infrastructure? And so this has pushed oil up pretty significantly over the last couple of days now. Brent crude back nearing $76 a barrel at the moment. If we look where it was, just a couple days before this, it was down around 70 to 71. And you've got West Texas Intermediate, which, again, just another standard for crude. Remember, there are plenty of different benchmarks that you have out there. Brent typically thought of as the global benchmark. West Texas Intermediate more closely tied to the U.S. West Texas Intermediate has gone from 66, 67 up to around 72 now. So you've got oil pretty active here in terms of the amount of concern that's out there as it relates to further escalation. Now, it's unclear exactly how this is going to play out, but look, there is a world in which this becomes a larger and more regional conflict that has, a real impact on the global economy in a way that it has not in the last year. But we're going to have to see how everyone ends up responding, just because that's what's going to determine how this plays out. I don't think there's any, course that's set in stone right now. You could have a couple more volleys back and forth and then it's done. You could have, Israel strike and then it's done. You could have this, become something that's really problematic and larger as well. And I don't think any of us know exactly where it's going to go at this point.
It's incredible in the commodities market, Chuck, just how quickly these things change. Just last week, it seems like we were covering stories about how depressed energy prices were and this concern that there was going to be a tremendous glut of supply heading into 2025. And that still could be the case, to be clear.
Totally.
But when you look at potential risk over the horizon and what you're seeing here, a lot of it hinges on geopolitical actions that neither you or I, or anyone out there for that matter, could predict what's going to be done from these different countries out there in the Middle East. Iran produces 3 million barrels a day of oil. That's something that has been a cause for concern depending on what happens here. You do have a very strong strategic petroleum reserves in the United States. It's up to 383 million barrels that are at our disposal. If there's sanctions levied by the United States, perhaps you see some upwards pricing pressure on energy. But in general, whenever we're covering these energy stories and we're talking about pricing, it's just a constant reminder of how quickly the dynamics in the market can change.
Let's take a quick break here. When we come back, we'll talk a little bit about Nike. They reported earnings after the bell yesterday, and we'll tell you just why their shares are struggling as they kick off the day today.
Breaking business and financial news first throughout the day, only here on the Financial Exchange Radio Network.
To fully maximize your Social Security benefits, it's important to understand how Social Security may affect your taxes. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and when deciding to collect Social Security benefits, it's essential to consider how those benefits interact with your other income sources, your tax situation, and your long-term financial goals. As an example, if you have tax-free or after-tax options in retirement, you can structure your financial plan to manage your future tax burden. Collecting Social Security too early without careful planning could limit your ability ability to manage taxes later in life. Our new free guide is called Social Security and Taxes, and it unpacks these issues and more. Get your free copy today by calling 800-393-4001. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits to your overall planning. Cushing & Dolan's new monthly guide will help you understand why beneficiary designations are a critically important part of your estate plan, especially if you want your assets to be distributed efficiently and protected from probate or the nursing home. They can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. Call today at 866-848-5699. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all three and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Summer's over, so now's the time to start looking at a fabulous holiday vacation, and there's no better place than the U.S. Virgin Islands. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. No passport is needed, and there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
Paul, Nike reported earnings after the bell yesterday. I'm assuming that the fact that they're down 7.5% today so far means there was something problematic in there.
Something amiss. Yes, Nike came out with another very weak quarter and also withdrew their guidance for the remainder of this fiscal year as they're going to be going through a CEO transition come October 14th. Elliott Hill will take over the reins and John Donahoe will step down. Elliott Hill had been with the company for 32 years. He retired in 2020 and now he's being brought back on to try and lead a turnaround effort for Nike. What had happened over the course of the last couple of years with Nike is they had reached tremendous sales growth with John Donahoe. He had grown their sales by 30% over a couple year period, getting them up to $51 billion in annual sales, largely leaning on their most established brands. Of course, the Jordan brand, which many of us are familiar with, that accounted for about $7 billion of those $50 billion in annual sales. Air Force Ones, Nike Dunks, and Air Jordan 1s, those were the three shoes that they continued to lean on the most. But unfortunately, they really just put too much supply on the market and the scarcity just wasn't there and demand has weakened significantly. Nike's battling several different challenges right now. You have tepid demand in China, which is one of their largest markets outside of North America. And you've got a relationship with wholesalers that they completely broke off at one point, but now they are starting to repair and just not a ton of innovation on their side of things. So putting Nike stock in a very difficult position. They were down 18% year to date after the close on Tuesday. And like Chuck mentioned, trending, I believe it was 5 or 6% down today in early trading. Yeah, off about 7%.
It is interesting. I mean, I'm not a sneakerhead myself. It's not me. I don't get it, but there's plenty of things that I don't get, and I'm sure there's things that I do that other people don't get. So I don't begrudge anyone with kind of how they spend their money. This is interesting to me in that, look, it sounds like one of those areas that was highly profitable for Nike were these, high-end collectible sneakers, and they just made too many of them. It's like it would be like if, not Ferrari, because I don't think Nike's like the Ferrari of sneakers, but it'd be like if Porsche made too many, 911s or something like that. And hey, like, you can still make a great product that a lot of people want to buy, but if you make too many of them, they're just going to sit on your dealer lot, and okay, that's it. It sounds like that's the same thing that ended up happening here. I'll read a quote just from this sneaker reseller. Said, quote, "They're digging themselves a hole because they put out too much stuff that people don't want. They're not gauging demand correctly, and it's causing more releases to sit." So it doesn't sound like they have no demand for their products, but hey, your margins get hit when you have to resort to discounts because stuff's been sitting on shelves for a while, and that's what it sounds like has been happening with Nike is, hey, they just made too much stuff. And part of this is, look, during 2021, 22, this whole collectibles thing kind of got a little bit nutty. And, I mean, people were buying up. Do you guys remember it's funny thinking back about some of the dumbness that went on then. Do you guys remember the, what the heck's the really heavy metal that people were buying, the cubes?
Palladium?
No, it's, hang on. It was, give me just a second and I'll pull it up. Tungsten.
Okay.
People were buying these tungsten cubes because they literally had like money that was sitting around, and a 1-inch tungsten cube weighs like 7 pounds or something like that. And so it's just like you pick it up, you're like, oh, like, this is so weird. But this was something with sneakers that was happening then as well. Hey, there was this huge collectible trend. I mean, like Pokemon cards were going through the roof, and like everything that people owned in like the 90s, baseball cards, Pogs, all this stuff was seeing a collectible resurgence. And I'm wondering if what happened to Nike here was they said, hey, this is the new normal where people want to, buy all this stuff, and they just thought it was going to go on longer than it did, and they got caught off guard when demand started to slip. Another area that you've seen something similar, we covered a story on it, I think, a few weeks ago. Watches, same thing. Like, resale watch prices were going through the roof back in 2021 and 22, and they've been plummeting now. So it kind of feels like there's this trend where producers of stuff that can be considered collectible or limited edition didn't adjust their supply plans for 2024 the way they should have. And Nike, I think, is a pretty clear example of that.
That's definitely part of it. In the Wall Street Journal here, I think they oversimplify a little bit, leaning probably pretty heavily on this part. This is part of it, but that's not the only facet that's causing Nike to struggle. Really, what should be mentioned alongside the collectibles piece or these sneakers is the wholesaler channel and that disruption and their real strong effort to try and develop their digital side of things, Nike, which is another thing that is a post-pandemic effect where they saw a tremendous amount of growth on their e-commerce side during COVID because no one could go out and buy sneakers physically. There was an assumption that they could just absolutely cut out the middleman wholesalers, the Foot Lockers, the DSWs, and really what they've found recently as trends have changed and people have gone back into physical stores, that they perhaps over-committed to getting rid of those relationships. So it's repairing that. It's the idea of putting too much inventory glut on those rare sneakers. And then you just have an economy in general that perhaps could be at the late stages of a growth cycle, and you're seeing a slowdown as a result there.
Chinese stocks, even though the mainland Chinese markets are closed due to the Golden Week holiday, Hong Kong markets are open, and the Hang Seng China Enterprises Index was up as much as 8.5% before closing up 7.1%, the 13th straight day of gains. This has been basically the only meaningful week for Chinese stocks in the last couple of years in the upward direction. Other than that, it's just kind of been like a steady bludgeoning with occasional respites from it. But the question on this will continue to be, hey, does this thing have legs beyond, a few weeks of excitement on the latest stimulus? And it's all going to come down to, does the Chinese government want to follow through on this? And are they making an active push to try to support the stock market and the economy? If they do, then the answer is yes. If they don't, the answer is no. Because the Chinese economy as it stands today still kind of sucks.
Really sucks. Yeah, I'm not going to be the first to tell you that I'm the foremost, authority on the Chinese stock market by any means, but when I see these gains, Chuck, while I'm aware of some of the policies that they've made as stimulus measures, none of those to me read as a tremendous boost immediately to consumer confidence, and I think that's the main thing that you have to think about there when you look at the market.
What if they don't want to boost consumer confidence and they just want to boost market confidence?
They're doing a good job of that, clearly.
Yeah,
and hey, they're ripping a page out of the U.S.'s playbook, which did some of this right around COVID and after that by being extremely accommodative, and you saw valuations soar as a result of it. It really took the year of 2022 to get some of those back at reasonable levels. So it's not a bad approach, but I just don't know how much legs it can have when you're not going to get sales growth to back it up or consumption to back it up.
The Chinese economy is still very much a mess, and nothing that's been done to this point is enough to, clear that up. But hey, you could maybe paper over it at least by saying, well, look, our stock market looks good. And the thing that is interesting on this is, hey, for the last, 3-4 years at least now, I don't have the data going back further, if you were a hedge fund or an institutional money manager, you said, okay, I can short China and I can go long U.S., and that was a great trade for me. If that starts to change, how does this potentially impact U.S. markets if you start to see some equity assets flowing overseas instead of everything coming here? Let's take a quick break. When we come back, we got Wall Street Watch, and then we're joined by Todd Lutsky.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits to your overall planning. Cushing & Dolan's new monthly guide will help you understand why beneficiary designations are a critically important part of your estate plan, especially if you want your assets to be distributed efficiently and protected from probate or the nursing home. They can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. Call today at 866-848-5699. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all three and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide this month titled Social Security and Taxes. Mike, first question to ask, how is Social Security taxation determined?
Well, it's dependent on all of your total income that you have in retirement when collecting Social Security. And they include the Social Security benefits in that calculation. But, generally speaking, if your only income is coming from Social Security, very little of it, if any, will actually be taxed when you go to file your return. On the other hand, if you have RMDs, maybe you're still working, you have capital gains, then it's possible that up to 85% could be taxed of your Social Security benefit by the federal government.
And in terms of the tax rate that you would pay on that portion that is taxed, how does that work?
Yeah, pretty simply, it's going to knock up against your regular brackets. And so we have the graduated income tax brackets, and you'll include that in the calculation of your adjusted gross income. Obviously, speak with a tax professional in regard to all of that. But then there's on the state level a bunch of differences too, because some states include Social Security income in taxation, others do not. Some include IRA distributions or pension distributions, others do not in their calculations. And so it gets more granular when you get to the state-to-state level, other than those few states that don't have any income tax.
Our guide this month is titled Social Security and Taxes, and the way to request it is by calling 800-393-4001. There's a whole bunch of this information in there and more that we didn't discuss. Again, this guide is titled Social Security and Taxes, and the number to call to request it is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after yesterday's rough start to the month of October, markets today are really flat as traders continue to monitor the escalating tensions in the Middle East, resulting in a jump in oil prices. Wall Street also readying for a jobs report on Friday. At the moment, the Dow is up by 23 points, S&P 500 is up only 1 point, and the Nasdaq up by 13 points. Russell 2000 up by 6 points, just over 0.25%. 10-year Treasury yield up 6 basis points at 3.80%, and crude oil up another nearly 3% today, trading at $71.80 a barrel. Nike down by over 7% after the athletic apparel company withdrew its full-year guidance after it posted a 10% slump in revenue for the latest quarter, while its profits declined 28% from a year ago. Nike executives also warned that sales could slide another 10% in the current quarter. Meanwhile, Humana down by 15% after the healthcare company announced worrisome preliminary Medicare Advantage data for the next year. Elsewhere, Tesla posted its third quarter production and deliveries report this morning, roughly in line with expectations, where global deliveries rebounded, reversing earlier declines this year. That stock down by over 5%. Sticking with auto, where Stellantis reported its U.S. sales declined 19.8% from a year ago in the previous quarter and saw an 11.5% decrease from the prior 3 months. That stock up by about 1/3%, and Conagra Brands down by 9% after the frozen foods and snacks producer saw its quarterly profit and sales miss expectations. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we are now joined by Todd Lutsky for Ask Todd. This is the segment where you get to ask your estate planning questions live on air. We got the phone lines open at 888-205-2263. Again, that is 888-205-2263. Usually have a chance to get through 2 or 3 calls, so make sure that you get in line early if you do want to have your question answered by Todd. That phone number again is 888-205-2263, and we got the lines open right now so you can get in line to ask Todd your question. One more time, that is 888-205-2263. Mr. Lutsky, how are you doing today?
I'm never better. How you doing?
Pretty good. I went out to dinner last night.
Yeah?
I met the best valet ever when I dropped off the car.
Best valet.
His name was Parker. It's great. Fantastic.
He is good. He is the best. That is the best.
Todd, I want to talk to you a little bit about beneficiaries on accounts, specifically on retirement accounts. What's the general thinking these days in terms of how to name IRA beneficiaries in order to coordinate them with an estate plan?
So this is, I'm glad we have a month to talk about this, folks, because this is very, very new in the estate planning world. It's only been around since the Secure Act came out, say call it 2022-ish. So that is new in the estate planning world. And there's a lot of rules that go with it. So it's going to take time to explain all this. All right, this is not a 1-minute answer. But generally speaking, when you're dealing with an IRA, right, you probably have to understand 2 parts within an estate plan. One, I've got income tax problems with an IRA because none of it's been taxed.
Mm-hmm.
There's a whole other problem that many people forget about, the estate tax side. When you die, it's also subject to estate tax. So it's included in the estate for estate tax, and as it comes out, it's subject to income tax. So how it comes out and how quickly it comes out is very important from an income tax perspective. And if that's not complicated enough, if that's not enough with 2 balls in the air that we have to think about, add in those folks who say, I also want to protect this from the nursing home, knowing full well that during life I cannot change the owner of the IRA to the trust because of that second ball in the air, income tax problems. If I took it all out and moved it to the trust to protect it from the nursing home, now I got to pay income tax on it. So that's a problem. So I didn't even really answer your question. I just laid the groundwork for what we have to start thinking about when we name the beneficiary of an IRA your estate. Like, when can you do it? Who can do it? How old should you be? Lots of stuff to think about. But the quick answer is, now that I've gone this far, is that you can do it. It can work to shelter assets from estate taxes. It can be done where it doesn't create any adverse income taxes. No better, no worse, but not adverse. And at the same time, serve to protect an asset from the nursing home in a way that we could not do it before.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. If you've got a question that you want to ask Todd right now live on air, studio line here is 888-205-2263. We're going to take a quick break, but when we come back, it is going to be right to your questions with Todd. That number is 888-205-2263. Again, quick break here, then right to your questions. One more time, that number is 888-205-2263.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. The following is an important message from SAB Solutions Incorporated, your trusted advisor for companies needing inventory management. Visit them online at sabsolutionsma.com.
I'm Colleen Sullivan with SAB Solutions. Does your warehouse need help with tracking inventory? Are you dealing with customers who are bothered by missed shipments and stock discrepancies? At SAB Solutions, we've been a trusted advisor to a wide variety of companies over the last 15 years. We offer our clients customized solutions to track their inventory using real-time data and digital technology, and our barcode scanning capabilities will help eliminate manual processes, which are time-consuming, can cause errors and delay shipments. Don't let mismanaged inventory slow your business down. Our solutions will provide you with a competitive advantage, saving you time and money and allowing you to operate more effectively and efficiently. For more information and a no-cost assessment, visit us online at sabsolutionsma.com. That's sabsolutionsma.com.
Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits to your overall planning. Cushing & Dolan's new monthly guide will help you understand why beneficiary designations are a critically important part of your estate plan, especially if you want your assets to be distributed efficiently and protected from probate or the nursing home. They can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. Call today at 866-848-5699. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I joined the Marine Corps when I was 18 and served proudly from 1981 to 1984. As CEO of Veterans Development Corporation, my goal is to give back to the veteran community, many of whom are employees of this company. This is one of the reasons I am so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K Boston. The DAV works tirelessly to support many of our disabled veterans and provide them access to critical services that help them live comfortably every day. I hope to be part of many more success stories of our vets being able to achieve their goals and dreams when their service ends.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Still a little bit of room on the phone, so if you have a question for Todd Lutsky, call 888-205-2263. Again, that is 888-205-2263. Let's go to Phil on the Cape. Phil, what is your question for Todd?
Yes, Todd, you did a trust for me more than 5 years back, and now in the trust I had a rental property. I want to sell the property. Can I take some money out of that sale?
So what are you going to sell the property for?
Oh.
About how much?
Oh, say around $600,000.
$600,000. Okay, so first, just to explain to everybody so we understand the whole transaction. One, the first question is, can I sell it? Because it's in an irrevocable trust. It's irrevocable, right?
That is correct.
All right, so can I sell it? The answer is yes. The trustee can sell it. Next, you're going to have capital gains taxes that you have to pay, right? So you know whatever you paid for it, plus capital improvements, less depreciation, if you've been renting it, is your basis. And so the difference between the fair market value and the basis will be your capital gain, which, folks, by the way, is the same as it would be if it wasn't in the trust. So we don't have any adverse taxes, so you'll have to file that return, pay the taxes, but the money will flow into the trust, and the house will flow out of the trust to the buyer. And now you'll file a 1041 income tax return to pay that tax. Now, we're getting there, I promise to your question. So now everybody can understand what's happened internally in the trust because of this sale. Now there's money sitting in the trust. I don't know, after taxes, let's say there's $500,000 in there. I'm just guessing. What can we do with it? First of all, I want to ask you, do you really need $500,000 before I tell you whether you can take it out or not? Is it something you really need to put $500,000 in your pocket?
I do not, but I spent a lot on the house myself, out of pocket expense. So I don't need $500,000, but I could use half of that. Okay, and again, I'm going to ask you again, why do I need $250,000 in my pocket right now? Because where it sits, and here's why I'm asking, it's important for everybody, that money is just as protected from the nursing home. Remember, you've been in there more than 5 years, folks, so that money is just as protected from the nursing home, avoiding probate, sheltered from estate taxes, providing for your family when you pass, as it was when it was a house. We didn't reset a clock. We didn't do any of that. So my advice would be, can we get it out? Yes. I'm going to just tell you that. I'm sure we can get you the money. Secondly, maybe I just take it when I need it. I know it's mine. Do I need it in my pocket right now, or do I need just some right now to take care of something that I want to do? So let me ask you that. Where are you at with that? Yeah, just something like take a trip or something like that.
Exactly. So that's what I want you to remember. I want you to remember that it's your money. It's just sitting there. If you don't need it all today, then don't take it. If you do need it for a car, a trip, or something like that, then I can explain to you the two-step approach to get it out by, gifting it out to the kids. And we can certainly talk off air. It comes out off to the kids, and then they give it back. So at the end of the day, that's a way to do it. Even though you can get it, my advice would be spend money outside the trust first, simply because that money outside the trust is completely at risk for the cost of long-term care. And so why wouldn't I spend that first? Especially if it's from an IRA, because saving it for the kids isn't always the best way to go, because then it comes out over 10 years to the kids if it's an IRA, which isn't helpful from an income tax perspective. So that's my thought on that. And I hope that answered your question and a whole lot more and give you something to think about as well. But we can certainly discuss it off air. Give me a call. Folks, this was a great question because it explains the way the trust works and how flexible it is. And it also even got us to the IRA question, which is what our guide is about, right? There might be money outside the trust that everybody has because we can't put an IRA in a trust. How do we deal with our IRAs as part of our estate plan, right? Naming the estate, although seemingly isn't the way you would initially think, now because the Secure Act passed, it gives us an opportunity to name the estate as an IRA without causing adverse estate tax consequences or income tax consequences, and can ultimately protect it from the nursing home faster than we could otherwise before. So, folks, learn how to do this. If you have an IRA, get the guide, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, I've got another one here for you. Let's go to Jim in Maine. Jim, what is your question for Todd Lutsky?
Hey, Todd, I got a question on a step-up in basis on a primary residence owned by a husband and wife. The wife passed away years ago in 1990-something.
Oh, can you give me the year? Because that year is going to be really important. Was it 1997? Or was it before 1997 or after 1997? It's going to make a huge difference in my answer.
Yeah. Let's say before.
Before 1997.
Yeah.
Okay, because that's going to make a huge difference.
I'm in my car. Okay.
Go ahead.
So her interest in the house landed in a family trust. The language of that trust provides husband with a life estate. That her interest in that property in that trust was reported on her estate return and no Q-tip election taken.
Okay.
Husband dies in 2021, and we're thinking that, and he was a trustee of her trust, by the way, that family trust.
Yep.
We're thinking with that life estate, he gets a step up in basis. Okay. On his death in 2021. Okay,
so I think we're gonna have to say no on that, and let me explain. So, one, he had a 1/2 interest in the property, right? Because he owned half, she owned half when she died. Her half, as I understand it, got included in her estate, stuck in a trust. In the trust, it says he has the right to live there. Okay.
Yeah.
And there was a step up in basis, by the way, when she died on her piece that went into her trust. I'm gonna give you that. So there should have been a step up in, but that's 1996. So the number's low. So you got to step up for that half then. Okay. That life estate is not the kind of life estate that causes a step up in basis when husband dies. Okay. So when husband dies, the only way you get a step up in basis is if you die owning something. In this case, husband did. Husband owned half. So you're going to get a half step up in basis in 2021 when husband dies on his piece. There was a half step up in basis when wife died back in 1996, let's say. I get it, right? But no step up in basis on that life estate for husband. Why? Because in order to get a step up in basis when you have a life estate, the way the rule works is you have to give something away and retain the right to live there. In this case, husband didn't give anything away, right? Wife died owning a half interest in the property, and wife granted husband a life estate. Wife did so because husband didn't give away the property and retain the enjoyment of what he gave away. And that's what 2036 of the code says. You have to give it away and retain an interest in order to get a step up in basis. In this case, that didn't happen. Okay? So, and let me further explain how life estates work for folks that have done that, because they're looking at it and they're saying, well, wait a minute. I have a life estate and I gave it to my kids and I retain the right to live there. When you do that, when you talk about what's included, the full value of the property is included in the estate of the decedent, not just the life interest, which is amazing, right? But that's how it works. So if you're all listening and you've given away your property and you've retained the right to live there, when you die, not just the life estate is included, but the full value is included. And to your point, Jim, if that were the case, then you'd get a full step up in basis on those situations when one dies. So, but in your case, I hope I explained that clearly. You're not going to get another step up on the life estate piece in the wife's trust.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still a bunch to get to as we continue through the program. We'll be talking a little bit about the potential for a soft landing in the U.S. economy. Is it looking likely? Is it looking more unlikely now? Also, a little bit of chatter about the port strike that's going on and how that is continuing to impact things. We'll also talk about how storms that have gone through the Southeast are starting to have people rethinking whether or not they want to be living in Florida or the Carolinas, once highly sought after, and again, still really a highly sought after retiree destination. And we got a whole lot more to get to as well. All that and more coming up in hour 2. Stick around.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to 0. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to 0 due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston, proudly presented by Veterans Development Corporation. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Generally, for a married couple, you have several choices. The most commonly used one is you're going to make the surviving spouse the designated beneficiary. It doesn't shelter assets from estate taxes. It just passes to the surviving spouse. It avoids probate, and it's probably the best way to go from an income tax perspective, not necessarily an estate tax perspective. Another way would be you could technically name the trust the beneficiary of the IRA when you pass. That at least will help it shelter assets for estate tax purposes and still provide for the surviving spouse. But from a Medicaid perspective, it will then protect it from the nursing home, but it'll take 5 years. Perhaps the newest and best way to do this would be to name the estate the beneficiary, provided you are over age 73 or over. That way, it goes through probate into the will. It is sheltered for estate taxes. It is immediately protected from the cost of long-term care for the surviving spouse, and the surviving spouse has access to it as well.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide, Why Name Your Estate an IRA Beneficiary, right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all three and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free, because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, toys, medical supplies, and much more. I work with disabled veterans every day and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you today, and stocks are just kind of flopping around, not really doing much of anything. They're a little up, little down, a little left, a little right, but they're just hanging out. The Dow's up 40 points, the S&P's up 3, NASDAQ's up 27, so no real movement, about 0.1% on all the major indices, or a little bit less on the S&P 500. 10-year Treasury selling off, back above 3.8%, up 5.9 basis points, 3.802. We've got oil continuing to rise off its highs for the day, but West Texas Intermediate still up another $1.28 a barrel to 71.11, and the AAA national average for gas prices, that is still falling. Remember, there's often a delay here, plus we have some little bit of a backlog on gasoline futures coming down that still needs to hit. So the AAA national average below $3.20 a gallon to $3.19 6/10, another 0.8 cents off of yesterday, and so continuing to see those prices sliding. And we've got gold today down $19.70 an ounce to $26.70 and 60 cents. Paul, there's a piece in Bloomberg Opinion today. It's titled, "The U.S. Economy's Landing Isn't As Soft as We Think." And look, I don't think that this piece actually says anything about the soft landing or not, because the broader economic data is the broader economic data. But what it is pointing out is the auto market, specifically the auto loan market, is getting a little bit dodgy at this point and is a real cause for concern, though not one that is large enough to impact the U.S. economy in the way that the excesses of the housing bubble did back in 2007, 2008.
I was waiting for the conclusion at the piece to say that it was going to have a larger impact, because that's kind of what the title implies, that it's going to have this outstated impact, and really that's not where it landed. I would say that to summarize the piece, basically if you look at the auto loan market, it is accounting for about 1/4 of the non-mortgage consumer credit out there, and debt levels have been rising. I mean, all of us know, if you're looking at vehicle prices over the course of the last 3 or 4 years, they're significantly more expensive. And what occurred in 21 and 22 is that the average price for a vehicle ballooned significantly, where you saw in the 3 years prior to January of 2020, so from 17 to 20, the average monthly vehicle payment increased by about $40. Not too bad, very manageable. What you saw from January of 2020 to the 3 years after that to January of 2023 is that average monthly car payment was up by $130 to $600 a month. So a substantial increase. And for those who were lending to these buyers that had relatively low credit scores, there's starting to be some stress in that market to the point where the delinquency rate that we're seeing on auto loans is a little bit more reminiscent of what we saw in 2010. To be clear, I'm not making a parallel to the overall economy being anywhere near that level, but we're seeing about 3.8% auto loan delinquencies versus it's really been trending around 3% over the last 10 years or so if you look back at the data.
And the big thing on the auto loan market is, look, the data can be concerning, which I think it is. Like, it's clearly trending in a bad direction, but the overall size of the auto loan market just isn't big enough to cause the kinds of problems that we saw in 2008. Could it cause, a slowdown in the U.S. economy? Absolutely. But remember that when we talk about just the relative scales here, the auto loan market is a tenth of the size of the mortgage market. It's not you're not going to have like the great auto recession of 2025. You might have, this was a contributing factor in, heading to recession and consumers needed to deleverage, but this is not the housing market in 2008 just because it's not nearly as big and it's not something that has that kind of impact as a result. So it's problematic. It is something that does suggest, weakness amongst a swath of American households, but it doesn't keep me up at night because it's not going to be the epicenter of whatever happens. It'll be collateral damage that, happens as a result of whatever else is going on in the U.S. economy.
Right. There's some individual companies maybe that overextend themselves lending during that period of time, but we're looking at a very small subset of the U.S. economy and the U.S. market, stock market in general, that it is not something that you should add to your list of worries. There's plenty that you can have right now looking at the geopolitical environment, but this particular economic story, something that's noteworthy, but not something that should be overly concerning.
Let's talk a little bit about this port strike now into its second day. And look, this is something that the overall impact on the U.S. economy has the potential to be significant.
A lot bigger than the auto loan, for sure, yeah.
This is something that should keep you up more than the auto loan issue, because if this goes on for, we get past mid-October on this, there's some real problems in the U.S. economy then. So we're not there yet, but hey, how does this end up progressing? I've seen a couple of different things in terms of, where this is going to go. Some people, and again, Paul and I have never worked on a dock in our life. Paul, do you know anyone who works on the docks?
I have a client or two whose backgrounds is longshoremen, but not current. I believe that they're retired.
Tommy used to work on the docks.
Yes.
He did.
I heard that.
He did.
Heard that a couple times.
The union's been on strike, so he's down on his luck. It's tough. But in any case, Paul and I we're not involved in that business in any way, shape, or form. So all I can do is read the thoughts of people that are way smarter than me and tied into what's going on there. I've seen some suggesting that the movement yesterday, where the union came down off its 77% wage increase request down to 61.5%, and the ports and shippers boosted their offer from 40% in wage growth up to 50%, as, hey, we're getting closer to middle ground there. There still are questions about automation as well and things like that as it relates to, how these ports are going to be operated in the future. But I saw some people who understand this business say, there's a good chance this could be solved by the end of the week. I then saw someone else whose view I respect on this, who said, hey, this might actually take longer. This is one issue, but the automation one's the bigger one, and that's not being addressed here. So I don't know how long this goes on, but I do know if we're still sitting here after Columbus Day saying, this thing is still dragging out, real problem for the U.S. economy, and it could be the tipping point that ends up throwing the U.S. economy into recession.
Not to mention, the longer it goes on, the longer concern you'd have, or the more concern you'd have that inflation could potentially pick back up again if this is to go on for weeks on end. I would hope that is not the case and that they can come to an agreement. What is at stake here, what the impact is, just to give listeners a sense. You have companies like Walmart, IKEA, Samsung, Home Depot, Bob's Discount Furniture. Those are some of the 4 or 5 largest companies that import through these 14 major ports out there on the East Coast and the Gulf Coast. And we've got about 45,000 longshoremen on strike. This is the first strike of these constituents since 1977. The West Coast, which has a separate union, they had struck, I believe it was a little over a year ago. So there is some basis of comparison there. The best way to summarize this, it was mentioned in one of these pieces here, that duration amplifies impact. That is the best way to summarize this, that the longer this goes on, the more the impact can be felt throughout the U.S. economy, because these ports handle a significant amount of trade volume, about $3 trillion a year.
Let's take a quick break here. When we come back, we've got some trivia, and then we're talking about Rent, the what you pay, not the musical, right after this.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits to your overall planning. Cushing & Dolan's new monthly guide will help you understand why beneficiary designations are a critically important part of your estate plan, especially if you want your assets to be distributed efficiently and protected from probate or the nursing home. They can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. Call today at 866-848-5699. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston, proudly presented by Veterans Development Corporation. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Social Security benefits are a key source of income for many retirees. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Social Security offers monthly payments to eligible workers, their spouses, dependent children, and survivors. But if you aren't fully aware of the factors that can help maximize your benefits, you need to request our new guide called Social Security and Taxes. As retirement approaches, it's very important to understand these factors and develop a well-rounded plan to optimize your benefits. The guide will help you understand how to effectively leverage your Social Security benefits while taking steps to avoid leaving money on the table. Call us at 800-393-4001 and get your free guide today. Again, that free guide is called Social Security and Taxes, and you can get it by calling the Armstrong Advisory Group at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all three and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood, void where prohibited, dine in only. Well, 2 years before creating the Butterfinger, Otto Schneering created a popular candy bar that became the best-selling candy bar of the 1920s and 30s. Schneering, his first candy bar was apparently named after a former president's daughter and not the world-famous baseball player. Trivia question today: which candy bar did Otto Schneering create 2 years before he created the Butterfinger? Once again, which candy bar did Otto Schneering create 2 years before he created the Butterfinger? Be the 8th person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text. We'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 8th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, there's a piece in Bloomberg Opinion. It's titled, "Algorithms Don't Raise Rents, Landlords Do." What's the premise of it aside from that?
Basically, there is some rumblings out there that the Kamala Harris, her potential administration, if she were to get into office, would look at cracking down on algorithmic price fixing software to raise rents. So typically what you'll have is about 1/3 of rental units out there use algorithmic data in order to assess what they should charge for rent in a given market. Now, it's, I guess, being mentioned here that this could potentially cause price collusion if everyone was using that same source of data. And I just can't get behind it, Chuck. I don't think that this is what should be pointed to as the culprit for raising rents. I think it's much more the simple economic concept of supply and demand. We live in a country that has underdeveloped on the supply side for the last decade plus, and that is much more the reality of what we're seeing on the rent side of things. If you look in areas that are seeing a boost in supply like Phoenix and Austin, some of these others, you actually are seeing price reductions there. And so my view is that the market conditions will dictate what rent is being assessed, and this concern about worrying about algorithms, which should be used as a tool to help set prices and to help landlords maximize their profitability, is not something that should be used for malicious practices, because the market should dictate prices.
So I think that when we're talking about rents, it's very much possible that it can be both of these things that are causing the uptick. We've talked at length about how we just have not built enough housing, and that's a problem. But I think it was maybe a month and a half ago, a company called RealPage. I don't know if any listeners are familiar with it or not, but it's basically a rent management software that landlords use in order to help them, determine their rents. And they were subject to a DOJ lawsuit about a month and a half ago. And the lawsuit included quite a bit of data that pretty much showed, hey, the way that it works is by effectively sharing rent data between different landlords to tell them how much to charge in order to maximize their revenue. And sometimes that might be keeping units off the market. Sometimes it might mean larger increases that their software recommends. But the DOJ basically says, look, you are effectively creating a rent cartel in doing so because you are colluding between different landlords to raise rents to maximize the total amount of rent collected. And that's not something that is okay, which I would agree with. Like collusion and like cartelization, if that's a word. We just made it, so it is now. Like that's stuff that is bad. We want more competition. We don't want businesses saying, hey, what are you charging? Maybe I'll charge that too, because that's how you end up with higher prices for consumers. And that kind of collusion is specifically bad for buyers. So I think it can be both ultimately. And yes, the bigger impact probably comes from not building enough housing. But the fact that we have software out there that specifically is built to allow for the sharing of rent data so that landlords can maximize the amount of rent that they are collecting doesn't really sit well with me either. Like I think that I don't think that's something that anyone should say, yeah, that's just totally okay. Like that's fine. I mean, in any other business, we'd say that's collusion. We call it price fixing. Remember how many times, Tucker, how many times has Big Tuna been caught up in this? Remember all the tuna price fixing scandals we've covered?
Big Tuna.
Yeah, Big Tuna. You got to watch out for those guys. What about Big Rent? Huh? Big Rent.
The tuna's
Little Rent
too
looks
damn
like,
high.
Yeah, the tuna's too high in Mercury. Anyways, I don't know. I think it can be both, and that's kind of where I land on this is, look, we need to build more housing, but having software out there that allows for collusion, like price fixing between landlords, is probably bad. Am I wrong?
That would not be good.
So that's kind of where I stand on it. Let's see. I want to save this Florida story for the next segment here. You want to talk about CVS or Google?
Let's talk a little CVS.
Okay, things at CVS, they're bad. They're very bad. Not just at CVS, at Walgreens too. The two major U.S. pharmacy chains right now are dying. And it's unclear whether or not they are going to exist in the format they exist in a decade from now, quite honestly. They have all kinds of problems, including CVS. Look, they've got all these units that they tried to stick together in terms of they've got, a basic pharmacy. They've got a pharmacy benefit manager, which they bought as part of, what was it, the Cigna acquisition? The
Aetna in 2017. That one, to me, was probably one of the worst acquisitions of the several that they made, where Aetna, as a health insurer, has offered and enrolled hundreds of thousands of people into its own private Medicare program, and that has just been extremely costly and really been a difficult area to endeavor into. And Mike and I were discussing yesterday, you would think with the amount of knowledge that CVS has in the healthcare space that they would have been able to appropriately assess the risks that come with wading in those waters.
Sure.
Now, perhaps they couldn't have foreseen that the federal government was going to get in and negotiate prices, drug prices through Medicare, but there's no more company out there that should have been well aware of these risks before making this significant acquisition. It just has not worked out.
So the Aetna acquisition's been bad. Their pharmacy business is kind of dying on the vine, a combination of people changing where they buy the non-prescription drug stuff. People just aren't going in to buy like shampoo and deodorant in CVS anymore. You've got pharmacists that are completely burnt out because management is increasing their hours and the stuff they need to do, and they're not getting enough help there. So you've got pharmacists that are saying, look, we're fed up with this, and there have been a couple different walkouts of pharmacists at CVS in the last year.
And delivery alternatives out there as well in the pharmacy space.
So I don't really know what the future looks like for big pharmacy. Not big pharma, but big pharmacy. It's kind of like I'm not sure what the business is for these companies going forward, given how they're being outcompeted in a number of areas, and they've over-leveraged buying companies that have worked out badly for them. Quick break here. Trivia answers next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to STOP.
This message furnished by the National Association of Broadcasters.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all three and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Social Security and Taxes. Mike, when we talk about incorporating a Social Security strategy into a financial plan, what are some of the considerations?
Well, the consideration that everyone likes to focus on, and for good reason, is, hey, how do I maximize my benefits over my lifetime? If I live to a certain age, when's the best time for me to claim Social Security? Because obviously you have a wide range. You can start as early as 62, as late as age 70, and depending on how long you live, there's a calculation to figure out what would be the most benefits you would receive over your lifetime. But I would argue that for most folks, that's probably not the most important consideration to be making.
What is the most important one?
So I would be focusing on the impact of certain items to the success of your financial plan. So for example, if you look at your plan and say, wow, if I face a lot of inflation in retirement, maybe just because prices in general go up more than I anticipate, then delaying Social Security in order to get a larger base on which COLA is adjusted could be a really positive impact to your plan. On the other hand, if you have a shorter than normal life expectancy or a longer than normal life expectancy, both of those come into play as well when figuring out the appropriate time to claim that Social Security benefit.
Our guide this month is titled Social Security and Taxes, and the number to call to request it is 800-393-4001. Again, the guide that's available this month is called Social Security and Taxes, and the number to call to request it is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed filed in a while. The Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia question today was, which candy bar did Otto Schneering create 2 years before he created the Butterfinger? That would be Baby Ruth. Schneering claimed the candy bar was named after Ruth Cleveland, even though she died 17 years prior to the candy being invented. The real reason for Schneering's claim is likely due to him not wanting to pay royalties to Babe Ruth. Winner today of the Financial Exchange Show t-shirt was Sean from Temple, New Hampshire, and Sean's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's. To enjoy exclusive deals and specials, you'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
Paul, have you heard of Google?
Yes, I have.
Do you ever Google anything?
All the time.
So, Google is working on their next generation or next iteration of artificial intelligence, and specifically it's focusing on developing out platforms that allow for more reasoning to happen. So not just the recitation of facts and data. You know, hey, you go to ChatGPT, tell me a little bit about, shrimp and the North Atlantic. Okay, it can spit out whatever. Reasoning would be, hey, in a fight between a North Atlantic shrimp and a South Atlantic shrimp, which one do you think would win? You and I can reason that out. I mean, we can't because I don't know the difference between them, but obviously the North Atlantic one would probably win because of its greater tolerance for cold water. Just putting that out there. Temperature matters. But right now, if you look at the older models from different AI companies, they don't reason. They recite facts, but they don't reason. OpenAI and Microsoft, about maybe a month or so ago, released the latest iteration of theirs that had, more reasoning capabilities baked into it, and Google trying to work on similar improvements as they try to develop new products.
Yeah, Google's been a little bit slower to release any of its updates in this space just because of the brand reputation that they have. They recognize it's a marathon. They're really focused on, obviously, the ethical concerns that come with this type of technology, but it continues to be interesting, the innovation in these fields. This is much more of a reasoning-based approach rather than fact reciting like Chuck mentioned there.
Folks, the Armstrong Advisory Group is hosting an upcoming seminar. It's in less than a week. It's at the MGM Hotel in Springfield on Tuesday, October 8th. We're going to be broadcasting from the hotel, which is directly connected to the casino. There's free parking in the MGM lot, and all you do is just take the elevator down to the casino floor, and you're right into the hotel from there. So you can join us for a live broadcast of the Financial Exchange. Again, this is on Tuesday, October 8th, followed by an educational lunch with the Armstrong Advisory Group. What are we going to be talking about? The upcoming presidential election, the economic policies proposed by both candidates, what effect all this might have on the current economic landscape, and how we might see potential volatility and how that could help to influence different investment decisions. You can sign up for this event. Again, it's on Tuesday, October 8th by visiting armstrongadvisory.com/events. Just fill out the form that's associated with it, and that's all you got to do. Again, it's at armstrongadvisory.com/events.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I want to talk a little bit about the Florida real estate market because it's starting to get a little bit dodgy down there, and two culprits which are largely intertwined. The first is you just have these hurricanes that are continuing to batter the state. This year, the hurricane that just went through Helene was the fifth straight year that a Category 3 or above has hit the United States. Again, not all hitting Florida, but that's the first time ever that we have seen this happen, where 5 years in a row you've had a Category 3 or above hit the continental United States in a 5-year period. So you've got hurricanes that have been happening with, greater frequency, larger ones, and it's starting to impact homeowners there in a couple different ways. The first being people saying, look, I'm fed up with this, I'm sick of it. And the second being, hey, what's happening to homeowners insurance premiums is entirely predictable as well. Piece in the Wall Street Journal interviews one person, Jacob McFadden, who moved down to Florida in 2020, was paying $880 a year to insure his home. It's now up to $3,300 a year, almost quadrupling in a 4-year period. And this, quite honestly, I don't think there's any end in sight for homeowners insurance premiums down in the Southeast based on what we are seeing coming out of property and casualty insurers right now.
No, it's just astounding. Particularly that example really hit home that you mentioned right there with that quadrupling over a 4-year period, and that impact is being felt through all throughout Florida. Tampa Bay was an area post-pandemic where you saw the fifth most popular relocation destination there. A lot of people went down there, the coastal living and the remote work that surged during 2020, now sort of realizing that with the amount of hurricanes that have hit that area, it's just really difficult to own property there. And similarly, this is occurring in California as well, where you have a lot of insurers leaving in that state in addition to Florida. And particularly for luxury homes, what the homeowners insurance companies are stating is that they'd much rather diversify their risks amongst 4 $250,000 homes than one $1 million luxury home, just because of the costs associated with potentially replacing that $1 million home if it were to get knocked out.
Just as an example from another piece in the Wall Street Journal, at Citizens Financial Group, home insurance premiums for mortgage loans of more than $1.5 million jumped 130% between mid-2020 and mid-24. For mortgages between $400,000 and $8,000, home insurance premiums increased 12% over that same period. So it very much is something that's factoring in. And part of that is also because, look, if you look at where highly priced homes tend to sit, they're in areas that have great views. They're on the ocean. Yeah. They're on top of a cliff. They are, in places that are inherently dangerous because that danger produces the great views that people want. On the other hand, hey, if all you see out your window is, I don't know, a bunch of forest surrounding you in, Vermont, okay, what danger are we talking about there? It's not the same situation. So this is something that I don't think we are fully through yet, and how it evolves is going to be something that has the potential to, quite honestly, dramatically reshape migration patterns within the United States over the next decade, because one of the reasons why people move to a lot of these different areas, Florida is an example. Hey, it's cheap to live there. There's no income tax. Okay, it's great that there's no income tax, but now my homeowner's insurance is $12,000 a year. That's basically an income tax.
Plus the property taxes that are already built to structure to be higher because of no state income tax.
Correct. So this is something that really bears watching because, again, it's not just in Florida. Again, California is facing the same issues. Colorado is facing the same issues. Much of the Southeast. And it's not because of the politics of any particular state government or anything. It's just the math that insurers are doing with some of the losses they've racked up in these departments over the last 3 to 4 years. And so until they can get to a point where they are no longer hemorrhaging billions of dollars on homeowners insurance, rates are going up. Like that's the unfortunate reality of where we are going in that business there. Let's take a quick break here. When we come back, it's time for Stack Roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Fall is in full swing. The leaves are changing, the days are getting shorter, and the cold is inching closer. Don't let the prospect of darkness at 4 p.m. get you down, because your next incredible vacation is just a click away. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy one or all three and experience rich history, world-class cuisine, a wide variety of water sports, and the most pristine beaches anywhere in the world. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip you'll never forget. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Whether it's a romantic getaway or a family vacation, make your plans now to get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits to your overall planning. Cushing & Dolan's new monthly guide will help you understand why beneficiary designations are a critically important part of your estate plan, especially if you want your assets to be distributed efficiently and protected from probate or the nursing home. They can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. Call today at 866-848-5699. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
To fully maximize your Social Security benefits, it's important to understand how Social Security may affect your taxes. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and when deciding to collect Social Security benefits, it's essential to consider how those benefits interact with your other income sources, your tax situation, and your long-term financial goals. As an example, if you have tax-free or after-tax options in retirement, you can structure your financial plan to manage your future tax burden. Collecting Social Security too early without careful planning could limit your ability to manage taxes later in life. Our new free guide is called Social Security and Taxes, and it unpacks these issues and more. Get your free copy today by calling 800-393-4001. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The
Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K set for Saturday, November 9th at Fort Independence on Castle Island. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at dav5k.boston. Time is running out if you want to take part, so once again, head to dav5k.boston and secure your spot today. The DAV 5K Boston is presented by Veterans Development Corporation.
Paul, what do you have for me for Stack Roulette?
Southwest Airlines is shaking up their seating, Chuck, here. This has been mentioned, but we got some more detail on this shakeup on their recent Investor Day, where effective for early 2026 travel and late next year, 2025, when you're booking flights with Southwest, you will be able to pick your seat. They will no longer be having their randomly assigned seating. And as a result, the Wall Street Journal here did a nice breakdown of kind of the winners and losers of this change. The winners are those people who get anxiety about not knowing where they're going to be sitting going into their flight. 86% of airline customers, according to a survey done, want assigned seats. So those people will be satisfied to know that Southwest is going to have that going forward. But for those who like to take a chance with seat roulette, that is no longer going to be an option. Also, what you're going to see is if you buy the cheapest fare out there, which is the want to get away fare, your seat is going to be randomly assigned during online check-in, meaning though Southwest kind of disputed this notion, you're just going to get the scraps at this point if you buy that cheapest ticket. Southwest's argument to that is they still allow for the 2 free checked bags along with even that cheapest seat that you can purchase on that want to get away fare.
I don't know why people complain about the whole Southwest not picking a seat thing.
Didn't bother me too much, honestly.
You know what you're signing up for. It's not like you got fooled.
Well, yeah, you just pick another airline if it matters to you.
Right.
And it's what type of flight would you be concerned about having? Like, we have young kids here. If I'm flying somewhere with young kids,
I'm not booking Southwest.
It's not going to be an option.
Right.
We have to have assigned seating. You have to know how we can situate ourselves to protect the other airplane flyers from my young kids throwing a fit. If I was flying somewhere on a bachelor party solo, then I wouldn't really care as much. It wouldn't be as big of a concern. When you're traveling solo, a lot easier than with young kids. So
you going on lots of bachelor parties?
I
these
wish,
days?
man. It's been a long time.
I would love to go on a bachelor party right now.
I wish.
I would love it, Paul.
Why don't the three of us get together one weekend then?
Fake a wedding.
And what's the movie where the
there is a movie, yeah.
What's the movie where they have the fake friend who they these like 4 guys create this fake friend that they have through their entire adulthood to use as it's like
the scapegoat for everything?
I think it was just called Bachelors?
No. It's not a bachelor party movie.
Oh.
It's one where they create this fake friend that they're always using as an excuse to go do things. It's something like
Ricky.
Yes, that's
Stenicki.
Ricky Stenicki. That's the one.
John Cena.
So
Efron's in it.
Can you read the premise of it from like Wikipedia or Rotten Tomatoes or something? Because I'm not doing it justice.
Stand by. I'm pulling it up now. When 3 childhood best friends pull a prank that goes wrong, they invent the imaginary Ricky Stenicki to get them out of trouble. 20 years later, they still use the non-existent Ricky as a handy alibi for their immature behavior. Director, Peter Farley.
So I think we should go to Ricky Stenicki's bachelor party in a few weeks and see how it goes.
We've got a new employee at Armstrong Advisory Group. That's what I'm telling my wife tonight.
Ricky Stenicki is, we're heading to Alaska for some tuna fishing because that's what Ricky wanted to do.
That would not rank high on my bachelor party destinations.
No. I think it'd be a tough sell, probably a long flight too. Tom Brady put his watch collection up for sale at Sotheby's.
What, is he running out of money? He's getting paid $37 million a year to broadcast for Fox.
I am kind of wondering what the deal is here on this in terms of...
Still getting FTX, right? Like trying to get back those funds?
Recoup the shares.
Yeah.
But so they're hosting what's called the GOAT Collection, Watches and Treasures from Tom Brady. And the watches are anywhere between $12,000 and $800,000. So yeah, if you've got $800,000 floating around to spend on a watch, then, you could potentially own one of Tom Brady's. They're also selling the shirt that he wore to the NFL Combine, his final college game jersey from Michigan, a Buccaneers game-used helmet, and, he's selling this. Obviously, says, I'm excited to give fans and collectors a chance to own and cherish these special pieces from my journey. And I'm just kind of wondering why. I mean, I don't think he's broke. Again, as you noted, he's making plenty of money with his Fox contract these days.
The divorce, he's divorcing someone who is probably wealthier than he was.
Not probably.
Definitely.
Yeah.
So that's not a concern necessarily. I don't think...
I can't even pronounce most of these watches because they have French names. So,
Patek Philippe... Audemars Piguet.
Look at you. Look at you, old French Paul.
There you go.
I own several.
Paul can tell us about French watches, but not the price of garlic. I think that's indicative of, just where we are these days. But yeah, so look, Brady's selling all this stuff. I don't think it's because he's broke, but you kind of look at it and you go, well, what are you doing? If you just wanted... Brady's wealthy enough that if he just wanted fans to have it, just find, have something, hey, post, an Instagram thing. Hey, write me your story about why you want my, Combine jersey and what it means to you, and I'll give it away to the, the person with the best answer.
I don't want to be this guy, but it seems like this should be much more of a charity sort of endeavor.
Or
than
that.
He has so much money, and to really continue to squeeze the lemon juice or orange juice, whatever analogy you want to use, out of your brand name just to sell your watches, to me seems a little unnecessary
and
when you're getting paid as much money as he does.
Yeah, the charity thing would make sense. I know he used to do a ton with Best Buddies in the area. It would be an easy way to be like, hey, we're trying to, raise as much as possible for, charity X, Y, or Z. Maybe that is happening here and this piece just doesn't disclose it. But...
I'm not against, people getting out there and making money. It's just like, of all people...
Tom, you don't need to sell your watches.
Right.
What's going on here, I think, is the question. Taking a quick look at markets. Still a little bit of slight upward drift today after yesterday's sharp downward move. The Dow's up 90 points. The S&P's up 6. The NASDAQ up 41. So anywhere from 1/10 to 1/4% we're seeing floating upward in U.S. equity markets right now. 10-year Treasury is up 4.5 basis points to 3.788%. And we've got oil, West Texas Intermediate, pairing its gains from earlier in the day, now up just 40 cents a barrel to 70.23, despite continued concerns about escalation in the Middle East. Gold also dropping today, down 18.60 an ounce to 26.71 and 70 cents. So overall, kind of a quiet day after, again, a big move to start the week off. Tomorrow, we do have some additional economic data coming out. We get ISM services data at 10, along with jobless claims data at 8:30 a.m. So those are the two things that we'll be looking at. This all in preparation for the jobs report for September, which is out Friday at 8:30 as well. So we got 2 busy days to finish up the week. Have a great rest of the day today. We'll see you tomorrow.